Welcome to the new setup. Big day, Microsoft, Google earnings. I've gone through them, but I want to put things somewhat in perspective. First, I want to say these are very solid earnings beats. They solidly beat earnings expectations in a quarter in which we're expecting to have positive GDP. GDP is projected to still be positive. These companies are putting out very solid earnings beats relative to expectations. However, despite the earnings beats, when we slow down, do a little bit more perspective searching, and don't make our decisions entirely based on what the actual number was relative to what a group of 20 analysts projected the number would be, and kind of take a zoom out a little bit, we can adapt where we're thinking about things. So I took a look at Microsoft's, and Microsoft was the better of the two numbers. Very impressive number. They reaccelerated their growth rate, and we'll get into what we think of that growth rate in a moment. But first, I want to talk about Microsoft historically. Based on my research, Microsoft spent a lot of time trading below a 20 multiple up until about June 2017. Eventually, in the new setup, I'm going to figure out how we can get screen sharing. But up until June 18, it looks like the stock was trading below a 20 PE. June 18. That was not too long ago. That was during the Trump presidency, who obviously experienced part of the COVID boom. And, a lot of things are similar compared to then. Very low interest rates then. Very low interest rates. But not as much cloud, although they were beginning to enter the cloud space. Now, after today's numbers, which were strong, they're not really projecting a hardcore slowdown in Q2. We're looking at roughly a 32 forward multiple. So that's more than a 50% increase in the multiple for the same company. Now, I get it, ChatGPT, AI, et cetera, et cetera, et cetera. I'm not going to get too much into the AI debate. All I'm going to tell you is I listened to both earnings calls, and I got to the Google one early. And the Google one was early on YouTube. It showed some video streams of their products and their potential AI, and it looked like better than ChatGPT to me, Google's AI. I don't know if it's going to be better. All I'm saying is these are really just, in my opinion, in terms of a product perspective, yes, they are very good and useful and helpful products. But I'll call myself pessimist, okay? I'll call myself a pessimist. The pessimist in me, or the Debbie Downer in me, is looking at them like very advanced and glorified chatbots. Very broad-based, consumer-focused chatbots. I don't see this as a totally revolutionary technology. Now, hopefully it'll bring some additional revenue into the company, but cloud is where the revenue's coming from. YouTube ads is where the revenue is coming from. Computer sales is where the revenue is coming from, albeit not as strong. And we'll get into that in a moment. So relative to historical multiples, very extreme. Relative to historical growth rates, we're pretty low. This was Google's first ever quarter, I believe, or YouTube's first ever quarter, or maybe Google's something of consecutive quarter-to-quarter declines. Let me see if I can get this exact fact for you. One moment, because this is it's since the first time Google went public. So we're trying to find this fact. Hopefully I can find it relatively quickly. I don't think I'm going to be able to find it, but something Google 2 consecutive quarters of decline. So first time since 2007, I believe, and the stock went public in 2004. And again, this quarter, we don't have the proof yet, but likely positive GDP. So all these numbers in a positive GDP quarter, the growth is slowing, the multiples are high. Congratulations to them. This is, very impressive strong numbers, particularly from Microsoft. Google had a lot of questionable things, deferring employee-based compensation being via stock being bought back, buyback, boosting the stock. Doesn't make a whole lot of sense to me, but it's happening. They beat earnings. Microsoft beat earnings and had pretty damn good forward guidance. So they're strong, but the growth rates are still below what you want to see, particularly for these multiples. That's just the truth. So the stocks are still expensive. Obviously this is an earnings beat. I was expecting weaker earnings, but the stocks are still expensive. I don't know what to tell you. That's my genuine opinion. You can look up the Microsoft PE chart, and you can see that we are at a very high Microsoft PE. So that's the truth. That's just how it is. And interest rates are high. They're going higher. So you can make your decision. It's a different world. And I mean that in truth, because it's the first month. March is the first month in a very long time, if not ever. We got close to or a very high level of M2 money supply contraction, 1.2%. So you want to price these stocks near, 2021 highs, all-time highs. Well, you got a lot of things to do because money supply is shrinking, interest rates are higher, and growth rates aren't the same, and future growth rates aren't the same either. So these companies essentially have to dominate the world more than they are already. They have to eat more of the pie because the pie is getting smaller. Let's not forget, Q1 had positive GDP. It was a strong, positive economic quarter. So Bank of America expects Q3 and Q4 of this year, and then Q1, Q2, and Q3 of next year to be a recession. So that's a very different environment. We'll see what happens, but I'm telling you that the objective fact is these growth rates for these companies are slowing. These are the pandemic beneficiary companies. Yes, they're beating expectations. Yes, they're popping after hours, but the picture is different and the price is the same, in my opinion. That's how I'm reading it. So you can do what you want with that. I'm still seeing, Alphabet net income decline. Now, granted, and operating income decline. Granted, Alphabet much lower from its all-time highs in Microsoft. So we'll give them that. Are these stock prices fair? I think they're fair if interest rates were low and growth rates were high. But interest rates are high and growth rates are low. So they shouldn't be, or Microsoft shouldn't be near all-time highs, in my opinion. That's just my opinion. We'll see what happens. These are the two strongest companies. Now let's get into what's reporting next. Then what we care about, and the biggest stock in the stock market, Apple. I am short Apple. And I'm short Apple because on the call, Microsoft said business consumer computing, or business computing, was what was keeping things strong and helped them be better than expectations. However, Windows OEM revenue still decreased 28%. Devices revenue decreased 30%. These are big numbers. They're going to affect Apple. Apple's the biggest stock. So I'm heavily short Apple. We'll see what happens. I was also exposed to Microsoft on the downside. Going to be taking losses there tomorrow after gains today, I suppose. But I think we have to take this with a grain of salt. And I think we have to stay focused on the Fed. The Fed's tightening, the Fed's propensity to want to continue to hike interest rates, and continue to see earnings come in. We saw YouTube decline. Meta's tomorrow. We'll see what happens. Meta could still have pretty good earnings if they cut costs efficiently, which they probably did. But we'll see. I'm not sure Meta. So that's today's video. I just want to share perspective with you because while everyone's talking about the fact that earnings beat That is a one-day tradable event. What matters is the company cheap? My opinion is that the company is still expensive. I can say that and simultaneously say these are stronger earnings than I expected. So that's today's video. And until next time, peace out.